Welcome back, investors, to Ticker Time News. I'm Adam, and Microsoft, ticker symbol MSFT, has linked in with the market. After the stock initially dropped following the company's Q2 earnings report, it was encouraging to see the stock rally off of its lows thanks to a positive earnings call and upside guidance for Q3 to fiscal year 22. I think the stock's initial drop was likely a response to the company's bottom line result. The quarter's EPS beat, while good, was not as colorful as the beats of recent quarters. Also, many of the product categories in the productivity and business processes and intelligent cloud segments showed year-over-year growth that was lower than their Q1 21 growth. The most glaring number was probably Azure, which had been consistently growing in the 50% range. Its growth dipped to 46% year over year in Q2, and that's versus a 50% growth in Q1, 51% growth in Q4, and a 50% growth in Q3 of fiscal year 21. The good news is that Microsoft did calm a lot of fears during the largely bullish conference call. So let's dig into these earnings. Intelligent Cloud, IC, was by far the fastest growing segment, with revenue up 26% year over year to $18.3 billion, at the higher end of guidance of 18.1 to 18.3 billion. However, as a nitpick, Microsoft beat prior guidance in Q1 fiscal year 22, while Q2 fiscal year 22 was at the high end of guidance. Also, the 26% growth was not quite as strong as fiscal year 22's Q1 growth of 31%. Azure's drop to 46% growth, a decent dip relative to recent quarters, is also housed under Intelligent Cloud's results. On the call, Microsoft delivered relief by reminding investors that Azure can experience quarterly variations, primarily through its per-user business. While Microsoft did not provide specific guidance for Azure, it did say that Azure revenue growth should be up quarter over quarter in Q3. Unlike Amazon, ticker symbol AMZN, which provides a lot of detail for its AWS unit, Microsoft does not provide a hard revenue number for Azure. Either way, I still like the directional commentary. The productivity and business processes PBP segment fared well also. Revenues grew 19% year over year to $15.9 billion. Like the intelligent cloud segment, the productivity and business processes segment's result was at the high end of guidance following a beat in Q1. Also, growth slowed a bit to 19% from 22% in Q1. Most of the productivity and business processes categories slowed as well. LinkedIn continued to shine thanks to a very robust job market with a 37% growth, but it did lag compared to its 42% growth last quarter. The star of the show this quarter was Microsoft's more personal computing (MPC) segment, which is not surprising because PCs, Surface, and game consoles are popular holiday gift ideas. Window OEM revenue jumped 25%, significantly ahead of expectations, driven by a strong PC market, particularly in the commercial segment, and supported by the launch of Windows 11. Even Surface came through for Microsoft. Revenues rose 8% year over year, a nice bounce back from the 17% decline last quarter. Bottom line on Microsoft, it looked like the stock was going to be in for a rough day. The company delivered another great quarter, but the quarter was not quite as stellar as recent quarters. However, the call did ease a lot of fears, especially with regards to the Azure dip. Also, the upside guidance for Q3 was a big relief for investors. Finally, the January tech sell-off has taken a big bite out of Microsoft. which makes me think it's worth a look during this pullback. Its business is quite strong, and getting in sub $300 is a great long-term buy and hold investment, in my opinion. Well, that's what I think of Microsoft right now, but I want to hear from you. What do you think about Microsoft's earnings report and their guidance for next quarter? And what do you think about Azure's slowdown? Do you think that will have much of an effect going forward? And remember, your comments make these videos so much better. Thank you so very much for watching, and I will see you in the next video.